All right, the YouTube link's in the chat. I'm gonna go live now, and you can
Okay.
get cracking.
Okay, great. Thanks. Dwight, are you seeing my screen?
Yep.
Okay, great. Hey guys, welcome to the webinar. I'll be starting in just a moment. I'll just let everybody get situated here. All right, guys, welcome to the third day of the 4-day live trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the Pattern Trader. I've been talking for the last few days about my price action, price pattern trading methodology, where all I look at are the price movements on the charts in order to capitalize on monster moves in the markets. So I guess the elephant in the room is Tesla. I've been short Tesla for the last couple of days and threw in the towel today. So this was actually kind of I made probably over $200,000 on this trade, and yet it was one of my worst trades of the year because I really ignored kind of the fundamental tenets of how I look at markets and price action. I got obstinate and sacrificed a lot of profits. I had over 4,000 shares short this thing. I got in perfectly on the turn here. I did the same thing in the Dow Jones today. I'll explain that in a minute. So I kind of look at how the markets dance around previous days, unchanged level. Unchanged, I mean the previous day's close. And right up here, Tesla was making a new high, and then I saw it was reversing. So I got short here right at 1150. And then this thing plummeted to 950, and I got obstinate and didn't get out, and I eventually bailed out today. So I made over $200,000 on the thing, but I sacrificed like 400 grand this way. So anyhow, you got to clean yourself, dust yourself off, and away you go. So and why I'm so upset at myself. I mean, the markets are inherently unknowable, is that, again, what I try and look at is how markets move around certain prices. And this is the weekly chart of Tesla. But really, and I know this is very nuanced, I'm really kind of hesitant to get into this kind of discussion because I don't know that I know how to explain it very well. But there is a dance around the bars. Whenever I see these bars stack up in a certain way. There's a certain sequence. There's a certain aesthetic to the way charts line up. And if you don't believe it, check how that just every time this just pivots off this uptrend line. So there is a sequence, an aesthetic, a design to these charts. And then there's a certain interplay, between the bars. And again, this is a weekly chart where each one of these price bars represents 1 week trading. And so when I look at a price bar like we had last week, right here, made a high, closed right on the low. So this is what this looked like. What I tell our members is, like over the weekend on Sunday, if I send you a trade and this is closed right on the low, don't automatically just put that trade in, especially if it looks like it's going to open right around where it closed, right? So if I'm short, ironically, I want to see this thing go higher, build some energy before it goes lower, and then, I want it to trigger my pending order. So if I stick in a pending order here, a resting order to sell it, what I want to do is see this thing go higher first and then trigger me, right? Because then it kind of gives me much more confidence that it's built energy. It's kind of exposed that the market can't go up anymore. And then once it triggers me, it's going to take me with it. But this is not what happened in Tesla at the opening of the week. So at the opening of the week on Monday, it kind of opened there. You can see that. Let me just move some of this stuff. You can see that this left little bar right here represents the opening. So you can see that it actually opened right a hair under the close. So the market just opened there. And so, when you have a big range like you had last week, the market typically doesn't just leave that alone and just gap and go lower. It usually wants to explore portions of that bar before it goes. And what you don't want it to see is explore it this way, where it goes down and then starts going up through what I call unchanged. Unchanged is the close. So when you see this start going down and then coming back up here, you're going to be fighting the bar for whatever that time frame is the whole week. And this is exactly what's happened. If you're short, you're going to be fighting this the whole time. And so I got very obstinate. This thing opened and then I got hypnotized by all the money I was making. The market just opened here. I was making, $50 on 4,000 shares. I was making 200 grand in the first 10 minutes of Monday's opening. And instead of, unwinding it, or certainly when it got back to unchanged, this is where I should have gotten out. Once it kind of comes back to unchanged, then you don't fight it. You throw in the towel. And I didn't do that. So it, opened a little lower today. It opened about $10 lower today. And I actually went long. I actually bought this. I could see that it wasn't going to go down anymore. And I bought it. And now you have a huge key reversal in the direction of the trend. Now we won't know, this is a weekly bar, so we won't know how this looks until the end of the close on Friday. But this is looking like a key reversal where it makes a new low, closes on the high in the direction of this trend. So for time being, looks like prices are kicking back in the direction of the trend. You have another key reversal here. So you kind of have this double bottom, these two twin key reversals, made a new low, close on the high, made a new low, close on the high. And so now this looks like the opposite of what I was looking at last week. And this thing looks like it wants to go back, but it's just a mess right now. You've got huge volatility. You've got a trading range of literally $200. And this thing is banging both sides of it. And so let me just show you, I blow this up a little bit. I took this picture right around the opening today where it was $10 lower in Tesla, and I just got out. I could see that this thing wasn't going to go any lower, and basically just got out of here. I made 40 grand on this position, and I had 3,000 shares, so 3 times that on another. So I made about 200 grand. I had some put options. I got out of that. I also shorted the Dow this morning, made a nice chunk of change and got out of that. And now I'm in a whole lot of these call options in BABA. I bought a ton of these things, and I'll talk about that in a moment. So I got out of my my shorts and actually went long. So you can see I have 750 shares. At that point, it was 1,060. Now it's 1,070. So I'm making 20 grand on this and about 80 grand in another account on the long side of Tesla. So got out of that. So I, will not fight the trend. Now, this is what we look like this morning. So like I said, there's always a dance around the bars. So let me just take this away. This is what it looked like this morning. So now I'm short, and I'm still wondering, I still kind of see this as the gestalt of why I got in this thing, this triple top. But then I've got all of these key reversals here. So it's a tug of war, as to what this thing's going to do. And believe me, I was feeling very uneasy. In the pre-market session, it opened lower, and then it went to a new high, and then it started coming back down, and then, it started to trade down here. But like I said, and I was in the shower this morning, and I try and think about how these bars sequence together. And if you're short, you don't want to, so I'm short right here. And even though it was going down, I didn't have a warm and fuzzy because, and I don't know how to really explain this. This is what I call an open bar, where, when it closes on the high, even though it's coming lower, there's no cap on it. When I say cap, when I get short, or I think this is what I like to see behind me. So if instead of, this closing on the high, if we had closed on the low yesterday, made a new high and closed on the low, and then today it was kind of dancing in here, I would have given it more room to go lower. And I don't quite know how to explain this. When something, again, closes on the high like this, markets typically don't open here and then just go lower. They usually want to go through unchanged, come higher, and then if it goes down, then it can do that. And so I just kind of knew that I was in for it today. I knew I was short, and I had a very uneasy feeling that even though this thing started to go lower in the morning, I didn't feel good. And then it started to creep back up, and I said, you know what? I'm just fighting this thing. I'm being obstinate. So I got out of my short trade, and I actually went long and made a nice chunk of change on the upside. And so this is really now just a dance within, huge volatility. And you're trying to figure out I was trying to figure out what is the governing pattern? What is the pattern that's going to govern or dictate the next direction of prices? And, when I got short, I was looking at this double top. And so, yeah, I was correct. That little, pattern governed or dictated that movement in that, particular time frame. But this is actually an uptrend, right? So the main trend is higher. And now you've got these bars down here where you made a new low, close on the high, made a new low, close on the high. So you have these you have a double bottom here and these key reversals. So that suggests that there's, a big bottom in here. There's a lot of support. So right now you're, really in between, the highs and the lows, and, it goes all over the place, and it becomes a little bit more unpredictable. What I always say about trading is that you should try and dial down a trade to where you understand your risk, understand exactly how to set up your trade, where trading is not about thinking where something's going to go, how much you're going to make it if it goes up. The question is, how much do you have to risk in order to get that outcome? And my most successful trades is where I can really hone in and dial a risk reward. And I think I'm going to show you a setup today that, in my water, I'm feeling like this could be, something that could really produce. So so Sean says my sound is muted. Are you guys hearing me? Are you hearing me okay? Dwight, is the sound okay? Okay, everybody says yeah. All right, so maybe just one off for that person. So are there any questions on Tesla? So, again, I try and yield and surrender to the market. I didn't surrender. When this reversed, I should have gotten out. When you're short and you see a big reversal, a big thing that closes against you, then, you shouldn't fight that. And I fought it, and, I sacrificed another $40. on 4,000 shares, and I lost $160,000 more than I should have. So even though I made, 200 grand on this trade, and I made about another 80 today, I'm pretty pissed. This to me is not a successful, trade. And so Warren says, could you have had a long with the stop just below the hammer? Yes, and this is, you could be long now. And so you can start, using these, lows as a bottom. So if you want to put a buy stop here and put your risk below there, that's your risk. And that's probably your reward. And it looks like this thing wants to go a lot higher. It's not exactly the risk reward that I look for in a trade, but this thing, if you want to get hold, this is a bucking bronco. And if you want to get hold of it, that's how I would set this thing up. But it does look like it's going to keep going higher. So James says, what is your stop? So it's under today's low, 1,030. All right. So, I tried, do gaps matter at all? Because Tesla didn't even, so basically it came right to this low. So I think this is what Ziad was mad at. So I don't trade, with gaps in mind. Sometimes they fill them, sometimes they don't. Sometimes it could take, 8 months before it comes down and fills it. So if you're trying to trade that, you could go through a massive losing streak before, that becomes a fruition. So I also shorted the Dow today. The Dow did come back up, but there was a point this morning, that I pointed to in my group where I shorted right at the high. So this is the Dow today. And let's just take this out. So again, I probably shouldn't get too much. I think I'm digging too far in the weeds to initiate you guys, but this was the Dow Jones. And so there's a bit of a double top right in this area, a resistance level, and you're poking around, this first level of, resistance. And so, and this was just, I shouldn't even talk about it, where the Dow Jones opened higher, right? And so I kind of surmised that it needed to go through this unchanged. And if it did, it would, go lower, that there was an area of resistance here. And so early in the morning when it opened higher and it looked like it was coming back to this unchanged, I shorted it right in there. I took it for a ride. I made about 10 grand and I got out. But I don't even want to talk about that. That's just digging too far in the weeds. Let's talk about the opportunity that, I'm seeing into tomorrow. So I'm looking at these China-related stocks. They've all been pretty beat up. Alibaba, Pinduoduo. There's an ETF, which is basically like a mutual fund or what's called an exchange-traded fund that, is a diversified holding of all of these China stocks. And it's called the ticker symbol is KWEB. And, I'm thinking that it could be representing an opportunity because this is what I'm looking at. And I made a very successful trade in Beyond Meat in May when I observed prices plummet below a very common support area. All these bears started chasing this thing. And now they could be trapped if this thing turns the other way. And so it creates this, what's called a bear trap, where, all of these sellers start chasing these prices. And then all of a sudden it goes the other way. They get trapped and this, bear trap is sprung and it can uncoil very quickly in the opposite direction. And that's what I'm thinking this looks like, where you pierced a common low, you kind of had this low and now you're turning around. And today you had this key reversal, made a new low, and then you close closer to the high than the low. And so I'm surmising that this is the beginning of something that could uncork to the upside. And so I think this is really where my strategic advantage is that I can, recognize things that turn. So the most opportunity is where a market turns, goes from one direction, and then all of a sudden it goes to the other. And this is where a lot of money is made. And to my mind, this could be an opportunity. So the way I would just play this, and I would use, I look for the market to confirm what I'm looking at. So I would put a buy stop above the high. The high was like 43.97 today. So you could put a buy stop at 44. And, if tomorrow the thing opens and, just goes lower, then no harm, no foul. If on the other hand, this thing goes lower and then triggers this, you could be into a very nice trade. And what I like about this is that the risk reward is nothing. So you could buy it here and literally put a stop loss somewhere here. And so this is a very small and acceptable risk, less than $2 risk for what could be, who knows, a $20, $30 upside. So this is, these are kind of risk reward relationships that I look at all the time. And I just put on a ton of call options, not on the K-Web, but on Alibaba, BABA, which didn't close that well. So, I'll see tomorrow if I'm right or wrong. And I might be just a little early on this, but this is, just the way that I look at potential opportunities and then how to capitalize on them. And the whole idea is to set up trades where you have a very small risk between here and here and, a very large upside. Literally, if I'm right, you'll see something like that. And so this is your risk and that's your reward. And so that is kind of the ideal thing is if that's the holy grail. If you can find trades with small risks and big outcomes, that's how I, would look at this market. So, I'm looking at BABA. I bought BABA today. And again, I might be early. This may or may not pan out. But again, I'm looking at a very small area. I'm going to know very quickly if I'm right or wrong. So here is Alibaba. Ticker symbol BABA. And I exposed myself too much. I bought all of these call options that expire on Friday and they're way out of the money. And so it's a huge bet. And I could get literally my clock cleaned. So you can see that we cratered below this support line. The thing's been straight down, but it looks like we could have a little uncoiling here. So you can see today we had a mini reversal, very slight, but we closed toward the high of the day. And again, the way I would do it is I would let the market confirm whether, this thing is going to do what I think it's going to do. You could put a buy stop here. You could even be a little bit more conservative and put a buy stop above that day, about above 130. And, even if you, wait until it catches there, you could still be into a nice move if it's correct. And that's probably the way to go because it could come here and still go back into the trend. But, this could be a very sneaky little bear trap where prices, get underneath, an area. And then if they come back above, certainly above 140, you could get this uncoiling. So let me show you. I think I showed you, just see in this is an example of a bear trap that I made over 7 figures in Beyond Meat. So this was in May. And let me just blow this up a little bit. This is my email on March 25th to our elite email to our elite members. If you want to be on our elite list, you get an invitation after this 4-day webinar series. So I had this thing on, and I'll look at it in a moment, where I just saw that I put a buy stop at 120. I said for the last several months, from the, even from the 175 to 200 price level, you've heard me predict that BYND would crash below the neckline, 113. Well, that eventuality came to pass. It did crash below the 113. However, following the crash through the neckline, BYND has taken a U-turn and appears to have formed a rounding bottom bull price pattern. Additionally, crashing below, then rallying above the neckline suggests there's a bear trap has been sprung. If this is the case, prices could rocket very quickly. And I was right on. Prices went from 120 to 150 in 3 days, and I made over 7 figures. I bought the call options, I bought the stock, and that's exactly what happened. So we could be looking at a similar thing in these Chinese stocks. We have this giant, where's BYND? This giant trap. Sorry, I think I put a fat finger on there. So here was, and this is on the weekly, this bear trap where I saw this double top, the head and shoulders, the whole thing, and then this thing cratered below the neckline at 113. You can see right here, market finally triggered this, and then prices cratered another $10. I'm looking on the weekly, I'll try and find it on the daily. And then we had this little congestion, and then we sprung back up above this neckline. And right there, I said, this is a bear trap that, all of this, down here, these guys are trapped. And that's exactly what happened. Prices uncoiled from 120 to 160 in, 3 days. And I made, 7 figures on that. So I don't know if this is going to be the same case now, but, this is, kind of the plays that I look for. And you don't need many of these if you're right. So, you can afford to lose and what have you if you make, 7 figures on even one. So that's kind of what I'm looking at. And I took just a monster position in BABA today. I've got over 800 call options. And I'm going to know very quickly tomorrow if I'm right or wrong. Didn't close very well, but, we'll see. So let me kind of look at gold. A lot of people asked about gold yesterday. I think gold could be representing an enormous opportunity going into next year. Probably not in the way you may be thinking. So again, what I try and do is put a structure, a boundary around prices to kind of understand what's going on. Because if you kind of look at gold, since last year, we've kind of been doing nothing. So it's kind of a coin flip. Is this thing going to go higher or going to go lower? And so what I try and do is, try and put various boundaries, various structures to understand and look at price, and then I let the market be the referee. So I think certain things are going to happen, but I'm looking for the market to confirm what I'm looking at. So you can see that gold, ticker, this is the spot symbol for the spot gold is XAU USD. This is the ticker for spot gold. This gold has been trading within an ascending, broadening price pattern. An ascending, broadening price pattern is defined where prices are going up throughout the pattern. It starts out life in the pattern very narrow and then widens or broadens out at the top. Now, this is typically a reversal. I'll show you the implications of an ascending, broadening price pattern on the pound Australian in just a moment. is typically a reversal price pattern, where if it starts coming out of here, this starts, going lower. And the neat thing is, we don't even have to guess where this thing's going to go. It typically retreats right back to the beginning of the pattern. So this is what we may have in store for us next year. As the Fed starts to tighten and hike interest rates, higher interest rates are like kryptonite for gold. And I can well imagine we're going to get, a bear market in gold. And you can see that, we've had these various key reversal, made a new high, close on the low, made a new high, close on the low. And so it's been this continuum of lower highs over the last year. So we've had these bounces, but every bounce is followed by lower prices. And now it looks like we're just hanging on for dear life right at this lower support level. So you can see we've got an inside bar or narrow range bar setting up this week. This is a weekly chart, so we won't know, how this is actually going to look until we see it on Friday. But for argument's sake, let's say we're looking at this thing on Friday. This is how I define an inside or narrow range bar, where literally the range of this week sits within the high and low of last week. So it's an inside bar, a narrow range bar. This is one of the smallest bars. And all this really suggests to me is that the energy is coiling, that we're just building energy. And that energy is going to release in a direction. And I believe that direction is going to be that way. And so, if you want to try and catch this thing, I would just simply sneak in a sell stop. Just use a different color here. A pending order where you put it, under these weekly lows around under 1750. So you could put a sell stop at 1747 and never look at it. Let the market do its thing. Just put a pending order there at 1747 and your work is done. And, maybe for the next few weeks, it goes, up and down and up and down. And then if you're triggered, you could wake up one night and then all of a sudden you've got $50 in your account or 50 gold dollars and what have you. And so that's how I would, look to play this thing. I do think that this thing is going to break out of here and go lower. And typically what happens is you get a break lower, you get a retest of that breakout, and then if it goes, then it's really good to go. So let me show you an example of an ascending broadening price pattern and how it behaved. So to me, that's the beauty of the markets. There's nothing new. The markets, repeat its cycle. It doesn't matter if you're trading corn. Let me just widen this out a little bit. So it doesn't matter what this chart is. In this case, it's the pound Australian. It could be IBM. It could be natural gas. It could be anything. These patterns always mean the same thing. So you can see we had this ascending, broadening price pattern. And just like gold, within the price pattern, I saw the double top here, and on the dailies, these key reversals. I started getting short up here, and then when it broke, I got short again and just made a massive amount of money on this move. But this is where we are, using gold as a metaphor. So gold is trading right on this lower support area right now. And so this is what I'm saying is that when it breaks, it typically goes back to the beginning of the pattern. And that's exactly what it did to a dime. And so this is what we could be looking at in gold, as crazy as that seems. And so I think there's enormous opportunity. I've started to move some money into an account to short gold. And that's what we could be looking at. Phil says, you say don't listen to news, but the news is definitely guiding gold at the moment. No, it's not. Price is ahead of the news. If you were looking at the news and trading gold, right? So gold is supposed to be, an inflation, safety haven, right? And if that was the case, we've had the worst inflation in 30 years, and gold has gone straight down for the year. So if you were trading the news on gold, you would be buying gold and you would have been losing for a year. So the news is not driving this. This is driving this. Gold is trading within this very narrow band. Every time it, finds a little bit of support here, it has a bit of a knee-jerk rally. But all of the rallies run out of steam, which suggests that it's inherently very weak. And once it runs out of more steam, that's what you're looking at. So I don't need to look at a newspaper. I don't have to figure out what the central bank's doing. I don't have to figure out what inflation figures are. This is all that I need to understand risk and reward. And the neat thing about this is that it's getting coiled into a very tight, small area. So if you sell it here, your risk is literally here to make that. So again, this is getting to the business end of this triangle where, it's taken over a year to kind of, do all this work. And the more work it does, the more sideways, the more kind of back and forth, and then it gets tighter and tighter. Then at some point it de-risks where there's almost no risk in getting short. Phil says, every time things get bad, COVID, it goes up. Well, it doesn't last very long. So you can keep, banging on that drum, Phil, but I don't, look at anything but price. So York says, do you see a huge cup and handle on the monthly? No, I see a huge ascending broadening on the monthly also. So this is gold. And you're basically putting on a top right here, right in the same area. So it looks like, a large, what could be double top. Now, there's a couple of things that are forming here. You've got kind of a symmetrical triangle. And again, you're getting closer and closer to the business end. Now, this is a monthly chart. It takes a full month to figure, fill all of this out. So we could be still 2-3 months away from this thing banging out of here. But, so I see that triangle, but I also see an ascending, broadening triangle on the monthly too. And look, you're right there. You're knocking on heaven's door right there. And you can also see these key reversals on the monthly. Made a new high, close on the low, 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 made a new high, close on the low. So all of these reversals are pointing in the direction that gold wants to go. And this thing looks like it's going to come down like a bag of potatoes. So Stephen says, how do folks trade in gold? You could trade an ETF on the stock exchange, GLD. You don't get as much leverage, but that's an ETF that, looks just like this gold chart. They would look exactly the same. Or you could trade gold futures, which is more, leveraged also, or gold CFDs or what have you. Ziad says, is silver as bearish? Yeah. Silver is. So you can see silver has also been trading in a trading range. We've had the worst inflation we've ever had. So if you're buying on news, then why is this thing going down for the last year? only, so this is why price is important, because, you know, if you bet on these fundamentals and try and play armchair economist, you know, I would have bet that gold and silver would be going higher, right? With all the easing we've had, with all of that, but it hasn't been. So now you've got this kind of triple top here, and you're just sitting on this neckline, which looks very tenuous at about 22 bucks. And once it comes here, it looks like we're going right back there. So do you have any questions about this price pattern, price action? So like I said, you know, I look at chart after chart after chart, and it's the same thing. I try and find a pattern, and then I try and find price action that puts, you know, the risk reward relationship, you know, in balance. So I can, you know, kind of make a play here where you have this key reversal. You basically made a new high and close on the low in this particular month. Made a new high and close right on the low. So I, you know, am surmising that you won't see this price for a very long time. So if you get short here, that's your risk and that's your potential reward. And so I try and, you know, find these relationships where I can create a risk reward relationship. And even if you're wrong, doesn't matter. All I'm looking at is for, you know, half a dozen great trades a year. And I've had many more than that, where I've made almost 7 figures on many trades, and I've made 7 figures on 2 trades. And I've lost a whole bunch in between, and it doesn't matter a whit. So Darius says, daily bars only close at the end. Intraday on daily chart could go below, hit your stop, and head up. How do you manage that? Well, if you get stopped out, then, you know, you get stopped out. You dust yourself off. And if the trade still looks good, you know, if you know, you're long, you got stopped out, it's still closed, you know, well, the chart's still intact, you can make a decision, you know, to get right back in. The market will let you in, you know, at all times. So the worst thing is to try and look at things intraday. And that's what I did today on BABA. You know, it really looked like a massive reversal. And then by the end, it just started selling off. And this is why I probably would have done the same thing, you know, but I would have gotten a lot better prices. So just look at that. So it really does look terrible on all of these charts. Probably not something that you ordinarily should do, but I just think that it's, you know, at a coil, it looks so oversold, and that it could you know, spring to the upside. Although this looks pretty bad looking at it this way. I think you know, I might have been dreaming on this one, but we'll see. How do you choose an expiration on options? It's really a function of how big a move you expect in, you know, what time frame. And to me, it's just I can't really say there's anything scientific about it. I just, you know, pick things where I think that it's, you know, achievable to get there. Now, you know, like on Beyond Meat and some of these things where I've anticipated big moves, sometimes I'll go very far away. Like before earnings, I was buying the 90 put options in BYND when it was like the stock was like 105. So way, way away. But I had a feeling there was a news. So right in here, you know, sometimes, you know, I'll look for something very cheap, so it really depends. So Beyond Meat had these huge bear price patterns on the weekly. Here's the daily, the thing's been straight down. And then we had a thing where, you know, the market goes higher. And so my whole thing is, if you're going to buy puts, you know, buy puts into strength and buy calls into weakness. So right in here, I started when the stock was 100. I started buying the 90 put options. So I was $10 out of the money, but I forgot I paid nothing for these things. I paid maybe $1. And after earnings, this thing went to 76. So I made 1,800% on my money. They went from $1 to 18. So, this is obviously an extreme area where I saw an extreme move and, pick something very far away for very cheap. And, the market coughed up, a very healthy gain. And I made a ton of money on that, So, in case of BABA, and, I think I could get wasted on this, and I put a lot of money in this today. I bought the 28 call options, which I might be dreaming on this one. And I bought them for about $1. So it's just a feel. It's, if this thing is a trap, this thing should open $5, $10 higher on Friday, on tomorrow or Friday. We could get a monster move out of here. If I'm wrong, I'm going to be wrong. And, I've been wrong before, and I'm going to lose a lot of money, and so be it. I bought the 128. So it's at 125. So it's $3 out of the money. So the 128s are there. And then I paid $1 for them. So you got to add that. So my break even is 129. And, if I'm right, I hope this thing gaps up tomorrow and, it looks like that. So again, this could be a bit of a fantasy. We'll see what happens. It closed pretty badly. And, this thing closed, badly. And I sometimes I try and visualize it getting through some previous obstruction, and we'll see on this one. But that's what I did. I bought the 128 calls that expire Friday on a bet that, we'd see an explosive move. And that's what you need for options. You need explosive moves in one direction, and you need them, in a pretty short time frame. I typically only go a week out, because the further and further you go out, you pay a lot, and then you really lose the leverage on that. Dan says, so did you hold the beyond puts for 7 months? No, I held them for about 7 days, for about 10 days. No, if you buy something 7 months out, you pay a fortune for them, and you start losing, a lot of the leverage. So again, I see a lot of you asking questions about looking at different charts and what have you. Really what I'm trying to do is reinforce this, kind of trading methodology where I look at certain price action, certain price patterns, and try and, extract, big moves out of the market. So I guess I'll take a look at some charts now if you don't have any. So Angat says, great info. So I'm trying to, give you a way of looking at charts. So you can see that if you look at BABA previously, so let me just peel out of this. So let's just break this down. And so this is just, when I open up a chart, I try and figure out, okay, what is this chart telling me? Is this market in an uptrend or a downtrend? And by and large, this has been in a huge downtrend. And the downtrend was predictable because, again, it all starts with a pattern. The pattern informs us as to trajectory, right? So right up here is this head and shoulders price pattern. Looks just like a man or woman's left shoulder. This is the peak of the head. That's the right shoulder. And then once it goes through the neckline, which is simply the line that, joins the entire pattern here, it tells us that this thing is, going down. And that's what ensued. So that's what these patterns inform us. Armed with just the knowledge of a few patterns, you can get short here at 260 and watch this thing go to 110 and make yourself all kinds of money. And, obviously within the pattern, there are whole, times where, the market will go higher. And, I'm thinking that this may be one of those times where it looks like we've reached pretty extreme levels and we may just come out of here. And so this is kind of a counter trend bet. There's really no established pattern. There's no nothing. There's just a feeling that, bear trap has been sprung and that we could uncork this way. But all the way down here, there were all kinds of patterns to get in sync with this trend. You had a double top here, you had a double top here, you had a double top there. And so there were all kinds of opportunities for you to join this trade all along here. So that's what I try and do, is find something that tells me, okay, this thing is going to go down. And then all along the way, I'm trying to figure out how to join that trade. So this is really what I'm trying to do on an ongoing basis. Alex is chat about outside bars. So an outside bar simply is a bar that, would go outside the range one way or another. I don't really put that much stock into it. So let's say this, I would call an outside Q reversal, where basically this day you took out both the low and high of the previous day. So that's what I call an outside Q reversal, where it takes out, that's actually a bit of a bear trap where you get the bears there and this. So, sometimes these outside days can be even more, pivotal, but it's just a reversal. Perhaps it has a little bit more strong. I don't really put that much stock into, outside, if it just, again, all I look at is how does something close relative to the high and low in context with the trend or the pattern. Now, I, typically say don't trade reversals in a vacuum. So, you see reversals all the time where it made a new low, close on the high. And yes, you could have traded that for a mini trade, but before you, blinked, it's going to be back in your face. So you have to be aware. Here's a little reversal here, made a new low, close on the high. And yes, you got a bit of an action, but, again, so certain, just because you see reversal bars, it doesn't mean that you take each one. I would be looking to take reversal bars in the direction of the trend, up until this time. So now when you want to join this trade, now you look for reversal bars in the direction of the trade, right? So the main direction is this way. So now if you're trying to join the trade, instead of buying these, key reversals, yes, you can get some mini little moves here, but you can see here, made a new high, close on the low. There was a top right there, made a new high, close on the low. There was a double top, two reversals there. And each time you got a massive move lower. There was two reversals right in that same area, another reversal here, and it puts you into these massive moves. So the first thing is to try and understand, okay, which direction do I need to be faced? And then look for those cues that get you in sync with that trade as it, keeps going lower. Alexander says, when you plan your stop loss, how do you deal with overnight gaps? Is there probably where gaps are located? So, don't worry about gaps and whatever. If you get stopped out, you get stopped out. You can't plan for everything. But if you do your job right and you understand the gap should be actually in your favor, right? So that's the problem. If you buy something that you shouldn't, then it could start gapping against you. But if if you're doing your job right, this gap is in your favor. Here was your double top in the direction of the trend. You should be short there. And, I look at gaps as something that should just send prices in the direction of where they should go. And if you get stopped out, then, you get stopped out. And, the idea is not to obviate losses. You're never going to get rid of losses. The whole construct of what I'm trying to impress on you is that your gains should be so much more than your losses. And you can see in a chart like this, all I'm trying to do is get a piece out of the middle of these moves. So you can see there's been some giant moves, and all I'm trying to do is take a piece out of the middle. And so it's not, a function of how many losses you have, but it's the quality of your losses versus the quality of your wins. So if I can make 20, 30, 40 bucks on a trade and, risk, I showed you on KWeb where I'm risking literally $2 to maybe make $5, $10, $20 in that trade. And so if I lose that too, so what? On the next trade, if I make 10, it makes up for 5 of those trades. So Mari says, are you still recommending shorting the yen pairs? Yes, I am. So I'm short the pound yen. I think we talked about this yesterday. Pound yen is dancing around, certain levels of support here, but I do believe that it will go lower. So we talked about this pound yen yesterday. And to my mind, this is, I always look for a pattern that I think is going to govern the direction or the trajectory of the next major move. Now, there's always times where it can go higher and then go lower and higher and then go lower. But, this tells me that, if this thing goes higher, I'm actually going to be looking to short into that. So I always look for kind of the guidance, what I call the governing pattern, something that is going to govern or dictate the next direction. Now, you're just resting right here at this major support area. So if this is just, bouncing around here, but, to my mind, it's not a question of if, but, when this thing goes lower. So, I said a couple of days ago, you could just use this as a risk. So that key reversal, that risk around 151. So, you could effectively get short here at 150, take 100 pip stop loss, in exchange for what could be, a healthy trade here. And I showed you yesterday how to do that on your position size calculator. Angat says, do you have a service for only stock trades if I don't trade Forex? So most of my daily emails now are focused on stocks. To my mind, FX is so range bound that I find I'm more effective if I just peel back and look at FX trades on the weekly. And I think I'm going to be inclined really to do that is, provide FX trades based on weekly analysis. And then my stock trades are, daily on the Elite service. So if you sign up for the Elite, you'll get a lot of stock trades. So here is the pound yen on the weekly, and you can see that we're just pounding it out, no pun intended, on this neckline. So we've come down and we're just, consolidating here, but this may take a little bit more time, but eventually I think you'll bust through this support level of pound yen and go lower. So what recommended software do you use to analyze your chart? Not quite sure what the question is. So you can use any, so you can see I have nothing fancy on this chart. You'll see there is no volume. There's no Bollinger Bands. There's no MACD. There's no moving averages. I just look at price and time. You can find any chart service that will give you, high, low, close. This is all I need to, make these decisions, where I can see a reversal right here, made a new high, close on the low, made a new high, close on the low, at really a double top area. So you had two tops right at that on the weekly, both close on the low. All you have to do is put your sell stop there at 155, 156, and you've got a 500 pip trade so far. So I don't need anything fancy. All I look at is price. And to me, price is the news. Price is all you need to make risk reward. So Johan asked the elite program basically, looks like this, where, it really is an education, where what I'm trying to do is, and this was a sell in pound yen a few weeks ago, and it's still trading at that level. So we're still, but what I try and do is show you what I'm looking at on the chart, and then discuss below, my analysis. And then I, also throw in the trade, but most people, focus on that. And really what I'm trying to do is make you guys independently able to assess the market for yourself. You don't need me. You don't need a forum. You don't need to, listen to these jerks on TV who don't know what they're talking about. Just amazing. I listen to these analysts all day long just for background. And, I'll see these $1 million analysts from Goldman Sachs. They get paid $1 million a year, and they'll sing you the most reasonable song, on why something is, going to go higher or what have you. And I'll look at the chart behind them, and, I'm immediately going to my broker and selling short. So to my mind, you don't need an MIT, economist degree. You don't need anything. If you understand price, I just use this as a weapon to make a, huge amount of money in the markets. So this is really an education tool, and this is what my emails look like. And then I tell you how to manage your positions. So you can see in this particular email, I had an open position in BIIB, and we were making $28 in that. I was short BYND at 99. It was trading at 65. I was making $33. I had two positions, making, cumulatively, $70 in BYND short. I had a pound New Zealand trade. I had a short, gold trade. And then I was also short Teladoc, and cumulatively, I expressed the stocks also in pips, just up a massive amount if you'd taken all of these trades. So if you take all, people always, wonder about the cost of the service. If you'd taken all of these trades, you'd make up the cost of the service in about a week. But I'm not trying to be self-serving. If you, want it, fine. If you don't, that's also fine. Warren says, are we going to get contacted directly for the elite? So I imagine after the session tomorrow, you'll get an email from our team. And then if you're interested, you talk to somebody. You don't just sign up somewhere on the web. There is nowhere to sign up for our elite program on the website. So you'll contact one of our team members, and they will speak to you directly. Sorry, I'm just trying to access my book here. And this basically explains everything about what we've been talking about, my 4-step trading process. And I'll put the link in the chat box here. So this is basically the 4-step or 5-step execution plan that I've laid out. Look at the phase or direction of the market, find a chart pattern, look for your insurance day bars, a key reversal inside day bar, and then layer it with a buy stop or a sell stop. And it's all laid out in my book. And the neat thing is you get to pay what you want. So you click here and you determine $5, $10, $100, whatever it is, you name your price, you place it there. And the thing is, whatever you pay, I double that amount and donate it to my favorite charity, the American Childhood Cancer Organization. And so thus far, I've donated over $35,000. So whatever you decide you want to pay for this book, I'll double that amount and send it to the ACCO. And so that A, you're going to get some great value from this book, and B, that your money is going to go to a worthy cause. Anget said, is this different from the PDF we received in the site? I believe it is. Yes, Anget. This is different. But again, you get to, choose what you want to pay for it. Whatever value you expect to derive, you can decide exactly what you want to pay. So that's the neat thing. And you have the link there. And this will basically, take, some of the concepts that I have difficulty expressing sometimes and put it into a pretty cogent, well thought out format. Everybody's bought the book, has not been, unhappy. Thanks, Stephen. I appreciate that comment. You're welcome, Anged. Laurie says, thanks. I learn something every time I get on. So yeah, the markets, I love the markets. I've been trading for decades and decades, and I get up every day because that it's a fluid thing, that it challenges your assumptions, that, I really love if something works out and, I found a way to assess something and it worked out. It's just a chart, but, it comes down to certain constructs. And if you can understand what the market's telling you, then you can also understand the future trajectory. And, even when things are difficult, and that's the thing about the markets, is that they will put on a pattern and then, disguise that intention for a while. So, in this time frame, the pound yen actually bottomed, put on a very nice Eve and Adam double bottom. When Eve is a multiple poke at one support level, this is a single. And so this thing bottomed, but you can see there was a whole, period of time where you didn't know, was this thing going to keep going down? Was it going to go up? But by virtue of understanding that it bottomed, every time it comes off, you can actually use those as an opportunity to get long. And then within those bottoms, you can look for price action. So if I think the market has bottomed here, if I think this is then I'm going to look for a day or a time where the price action starts telling me, how do I get in sync? So if I think that a market has bottomed, then by definition, over time, this thing should go higher. And so if I'm operating off that principle, that I'm looking for ways to join this thing, then I look for my key reversals, where you can see, and this is a weekly bar where each one of these price bars is 1 week in time. So this made a new low and close on the high of that week. So all you had to do was put your buy stop there, put your stop loss there. That's your risk and that's your reward. And then, I look to build a position. So if I'm right and the market starts confirming, here's another opportunity. Made a new low, close on the high. Then you had a whole bunch of inside bars, and then you can put additional positions as this thing goes higher. So that's how I use a combination of price patterns, but it all starts with a pattern. So this tells me in this time frame that this market wants to go higher. Now it looks like that energy is ending, and this kind of suggests that there may be another pattern, although this may be, a trick, and it could still, keep going in that direction. So, I will be wrong. And so I look for confirmation. I look for ways for the market to, put me in. So in this particular case, if you're not in the pound yen, I'd simply put a sell stop right there. put your risk right there. So that's your risk, and that could be your reward. And, guess what? If, the market keeps going higher, your pending order is not triggered. So that's why, I use these pending orders as a way to confirm what I'm looking at. So I think I'm looking at something, but I also realize I'm getting senile and delusional, and I may not be looking at something right. I mean, you have this big key reversal here, all of these guys here, which suggest that there's, major areas of support here. So this could still go this way. So I'm just looking if this thing gets triggered, that it's very likely that, I'm going to be on the right track. So I just use, this 5-step layered plan to, put me in these high value trades. Pranan says, are you trading weekly or daily? So I look at the daily and the weekly bars. So whatever corroborates. So remember, my whole objective is just to take a piece out of the middle, out of big trades, right? Out of big moves. And so whatever time frame, assists me in evaluating the opportunity I'm looking at. And it could be a multiple. Sometimes I'll start with the monthly, I'll go to the weekly and the daily, and if they all line up, that's one thing. Sometimes, the monthly, and the daily will be, out of whack because it takes a long time to fill a monthly time frame. And so that's fine, and you've got to kind of, rectify that. But what I'm not doing is looking at a 15-minute chart, because that's not going to give me enough information to see how to hop aboard a trade like this. And this is what I'm trying to achieve in my trading, is to find trades like this. Now, it doesn't always happen. Most of the time, the markets are doing this, right? So you could say, hey, for 3 months, I'm not making money. But, if you make all of your money here, who cares? It is a digital book, Simon, yes. Rob, thank you. Kim says, what do you think of Bitcoin now? Bitcoin, is, we talked about it yesterday, is at a real inflection point. It's going to be really interesting to see how this shakes out. The problem with Bitcoin is that it doesn't have a lot of history, and the history it has is, crazy. And so, yeah, you can analyze any chart. And but this one is, a little bit more difficult because it doesn't have a lot of history. But this is kind of how I'm looking at Bitcoin right now. So you can see there's a double top right at that 67,000 area. So this indicated that that market topped out there. And then you have these set of shoulders. And it's all resting on this neckline here. So you can see we're literally at what I call the MOT, the moment of truth. Does she go this way or that way? And so the way I look at charts is sometimes you can see a chart and you see the double top and the head and shoulders, and that tells you that this is what should happen. But if this starts to happen, I'll start to buy something just because it's not doing the other thing. So if something doesn't do what it's supposed to do, I will go the other way, because what happens is it busts. It becomes a busted pattern where the market starts busting the implications of whatever this is telling you. And so, what I've learned is that the market is fluid and dynamic, and you can't have any static, thoughts where you say, in my earlier days, I would see this and put all of my money here and the expectation of this, and then wonder why, I lost all my money when it did that. The market can do whatever it wants. The market is always right. I have my way of looking at it, but ultimately the market is the ultimate referee. So you can see now I just watch the market, and then the market will tell me if the market's, breaks through this recent low, then it tells me that, we're likely to go lower. On the other hand, if we start breaking above this area, then we could be busting that. Now, also, you're sitting on a pretty big trend line here. And this is what, I'm watching that it needs to hold in here. So again, if you just connect all of the lows, the recent lows, and this is why, Bitcoin is, a little bit difficult, goes from 0 to 67,000. So it's kind of a crazy chart, but I think you can basically, so this is what I'm looking at. If, we kind of come back here, we could hold and do this, or we could do that. And so this is, how I look at prices. I don't read news. I don't, look at all the pundits. I look at, so you can see here was a nice head and shoulders at $60,000 that give you a nice trade back to $30,000. So, this is how to use price, as a weapon. And now you kind of have this double top or this leaky head and shoulders. It looks pretty weak. And it does look like, this thing needs to come back. This thing, will come back to this low 40,000 area. And it kind of feels like, I don't know, but if it doesn't, it could open up a whole new move. So it's really at this critical, level right now. All right. Any stocks you keep long-term? Yes, I have a lot of stocks in a, safety portfolio, Costco. I have a bunch of REITs that just, generate me 4 to 6% in dividend income. So yes, I do keep stocks long-term. Let's see, another question. Antonio says, do I think the Nasdaq is going to break higher? Likely this is a very seasonally strong time of the year where, portfolio managers need to just, fill up or top up their portfolio. So December typically is a very strong month, but it's going to be very volatile in here. The Fed is now intervening in the markets. The Fed is now, an additional thing. And I think there is, but you can't look at all of that, but we are getting much, much more volatile. And volatility usually occurs somewhere near the top. So you can see this has been trading within a very nice channel here. And, we could certainly get another poke, at a new high. So this, could take off out of here very quickly. You could get massive volatility and follow through. Vincent says, when and how do you get out of a trade? So the market, I always have a saying, the market puts me in and the market takes me out. So, if I see some kind of negative price action, like, Tesla, I was short and I saw this, key reversal price action where it made a new low, close on the high, and I didn't get out. Typically when I have, conversely, if I'm long and then I see, huge key reversal, I typically start getting out, so I let the market tell me when, there's an area. Now, every key reversal is not going to end a trade, but, depends on where it is and what have you. I start thinking, okay, I need to recalibrate. So I let the market tell me when, it's, any trend is likely to end. All right, guys, I'm going to end it there. Check out my book. And so Stephen says, I'm up 400 pips this week since implementing your strategy. So that's awesome. I love to hear those success stories, Stephen. So thank you a ton. And I will see you back tomorrow, 4:30 Eastern Standard Time. Thank you very much.
All right, Mark.
Thanks, Dwight.